everyone, good day. How are you doing? So I hope I find you well. This is our first lesson on the advanced forex trading for beginners. Okay, the reason why I'm calling this an advanced class is because I hope you have all read or watched some videos on YouTube about the complete beginners course that tells you or teaches you about what are candlesticks, how to read candlesticks, how to use MetaTrader. So basically here I want to focus on the advanced part for those who are ready to make money. So I'm going to make some videos for complete beginners, for those who have no knowledge on forex or whatsoever. So after this video I am very much sure that you will have knowledge on a lot of things. So on our first topic we are going to begin with the market structure, guys. So market structure, this will be our first topic. I'm going to teach you about the market structure, the forex market structure. So we have got three market structures, guys. The first structure is a bullish market structure. Some call it an uptrend. There are so many names to call it. Some call it a buying trend. Some call it I don't know, there are a lot of names for this. And then the second one is a bearish structure. Or downtrend, or selling market. I am sure you might have come across such things or such jargon or such words. Okay, so our last one is the consolidating market. Consolidation, ranging, or sideways, or which other name? There are a lot of names that people have made. You might come up with your own name, okay? So it will make sense later on as I'm going to show you illustrations of what these are, right? Okay. So first things first, guys. So this is what we are going to be focusing on, right? Okay, our market structure. So now let's focus on the bullish market structure. So this is how this structure goes. Let's say the market starts from down here going upwards. The structure of a buying market or a bullish market or a market that is going up on an uptrend is like this. Right? So the moment the market starts from below here, it creates a high, and then after creating a high it comes back it finds support around this area, it goes back up and breaks this high. It creates a low here and then goes back up, it breaks this high, and then the moment it gets to a certain high, it comes back again, it finds support around here, it goes back again, it comes back down, it finds support, continuously like that. So this is how the market moves. There is no financial market that moves straight up like this or down like this. No. Why is that so? Because remember, the forex market is about trading the prices of the world financial market, and the economies are always fluctuating. You may understand that the euro sorry, you may understand that the euro today might be gaining value, so which means it will be going up. The next day it drops some value a bit, and then in the next few hours it might go up. By day end its value might drop a bit. So this is how the forex market moves. Okay, so how do traders make money? Okay, so whenever you open your trading chart and you realize that the forex market is going to buy at a certain level, you, let's say from this low, you buy it, and then you have to anticipate that prices are going to drop, and then you sell them. But if you want to continuously buy, the market offers what we call discounted areas. For instance, if you buy here, or if you miss your buy here and the market goes up without you, do not rush to jump into the market and buy from this area. You wait for the market to retrace and come back and offer you a discounted entry so that you can buy it here where it finds support. Remember, I said the market doesn't go straight in one line, but it goes like this, right? So if you miss your buy on this low, wait for it to come back and give you a discount, and then you buy it here, it will go up with you. If you miss this, it is going to retrace and find support. You find another buy entry here, you take it up, right? So this is what we call a buying market structure. I hope it makes sense. Okay, now let us move to a bearish market structure. Okay, a bearish or downtrend market structure is just the opposite. It is just the opposite of a bullish market structure. So in a bearish trend, the market moves this way. After the market has been going up, it has to come down. So a bearish trend or a structure of a downtrend or a selling market is like this. Is like this. Just the opposite of a buying trend. So if you miss your sell here and then it sells without you, you wait for it to come and offer you a premium, because you always want to sell at higher prices, right? So you offer it to come back at a higher price and then you sell. If you miss this, it will give you another chance to sell at a higher price. You sell. Remember, you always want to buy at lower prices and sell at higher prices. Supply and demand, right? Continuously this way, right? So these retracements are opportunities for you to sell in the market, right? Okay, so there are factors that determine why the market reverses or finds support at certain areas. For instance, you might be asking yourself, okay, how do I know that once the market comes back here and finds support, where is it finding support? So it finds support at areas of supply and demand. The large institutions and large banks, they leave traces and orders where you are supposed to also place your trades in line with them. I'm going to talk about it later as I continue on the market structure. There are factors that determine areas of supply and demand over here where the market finds support, such that you will know that once the market gets to this point, there's a certain scenario here that is going to make this a stronger resistance or support area. Okay, so this is a bearish or downtrend selling market structure, right? So now let's move to the third one. The third one is a consolidating market structure. So this is when the market is not clear whether it's going to be buying or it's going to be selling, right? What do I mean by that? Okay, this is what I mean. So if the market is sideways, it means the market is moving like this. It's neither going up nor down, but it's just moving sideways. If the market is moving up, then you want this. If it's moving down, then you want this. But if it's moving sideways, this is what happens, right? Now, every time when they say, for example, you are trading the US dollar against the South African rand, if the South African rand has been stable for the whole of the week, let's say for 2 days, the exchange rate has been stable, which means the market was like this. This signifies a stable exchange rate. But the moment one currency loses value against the other, either this happens or this happens. That's when we start saying, oh, the rand has finally gained value against the US dollar, or the US dollar has finally gained value or lost value against the South African rand or any other currency, right? I hope this makes sense. So this is how the Forex market moves. You realize that once you open your trading charts, which is what I'm going to do and give you proper illustrations, the market moves up like this. It's buying. And then sometimes it reaches a point where it starts to consolidate. And then from consolidation, the market will continue going up. Or after consolidation, it might start going down. Right? Okay, I hope this makes sense. Now, let us go to a real chart. And I'm going to show you what I mean by this. Okay, this is a Euro US dollar chart. So on this Euro US dollar chart, the market has been selling. Okay, this market has been selling here from this top, right? From the top left corner here. Okay, from the top left corner above here, the market was selling. Okay, it was selling all the way down from here up to about this point. right, up to about this point. This is the lowest point where the market was selling. Okay, now I want you to notice something. This is a real chart example, so it's not going to be as clear as those drawings. So you need to teach yourself to see what I'm talking about in the midst of chaos, right? So this chart basically means that it represents the euro against the US dollar, right? So if the market is dropping like here from this top to this low, it basically means the euro was losing value against the US dollar. In other words, it means the US dollar was gaining value against the euro, right? So where is our sell market structure here? This is where we find our sell market structure. Okay, I hope you are following. So from here, our market started up here, right? This is a 4-hour chart. It came all the way down to this point, and then it went back up to this point. It came all the way down to this point. It came up to this point. It came down again, and then it went up again, came down, up, down. This was our peak formation low. This is the lowest point, right, to signify the end of our downtrend structure or sell structure before the market started going up, you see. So this is the pattern of a market structure, if you realize. Remember, as I said, it's not so clear. Okay, so every time the market drops like this and it comes down around this area to find support around this area. There is always a reason. For example, it finds support around this area, right? It also found resistance here, and then it started dropping, right? As you can see, as the market was coming down, they would create, okay, like this, from here to here, right? The market went up, and then from here it came down. From here it came down, and then they broke this previous low. They create another low here, and then it goes up again. Then they come down, they create a new low here. The previous low, this one has been broken. So this is what we talk about when we mean the sell or bearish market structure. So always trade with the trend, right? Always trade with the trend. If you didn't get your sell above here, the market is going to give you another opportunity once it retraces to this point. Do not rush to sell here. If you miss this point, don't sell it here. Wait for it to come at this area, right? It will give you another opportunity to sell. Now after that, let's talk about an uptrend or a buying trend, which is the opposite, right? Here is a buying trend. From this low, the market did this, created this high, came down, up, down, up, down, continuously like that. Okay, as you can see, guys, this is our uptrend. So every time the market is buying, this is what it does. You need to find your buyers in here, right? Continuously again, this side is now selling. Look, from this top down, up, down, up. So I want you to notice something. The moment the market is selling, it doesn't break the previous low, the previous high. What do I mean by that? There is this high. There is this high over here. It's still protected. It wasn't broken, right? There is this high again here. It was protected. The moment the market breaks the structure of a market, it signifies the trend change. What do I mean by that? Okay, this is what I mean. Pay attention. Let's say the market was in a buying trend like this, right? And then it gets to the top and then it wants to sell. Remember, it was protecting these lows, these lows, these lows. The moment it comes down and breaks this low here, and then now it starts doing this. Now, these highs are now being protected, but it's now breaking the lows, right? So the moment it breaks this low over here, it signifies a change in the market structure from a buying one to a selling one, or from a selling one to a buying one. So if it's selling like this and then it reaches to a low, it will break this high and then start doing this to signify a change in the market structure. Hopefully this makes sense, right? Let's look for a change in market structure. Okay, now look at this. You see around this area, the market came all the way down from here. Okay, I want to do this. It came all the way down from here. They came here, they created a low, created this high, they created this lowest low, and then from here they came up, and then they broke this high here, and then they started going up like this. You see that? They broke this high over here. This high was broken over here. So now it signifies a change in the market structure. I hope this is clear, guys. Right? So if you've got any questions, please feel free to ask in the comment section, and then I will create a video and I'll try to be as clear as possible. And also I will also give you the broker that I recommend and a free forex trading community where we discuss most of these things on WhatsApp. So I'll put the links in the description. So for more information on our next topic, on the advanced forex trading class, I am going to share the video with you. So click the subscribe button and follow me, guys. Even on social media, I'll be updating you on everything for free. This is the strategy that I use. Nothing is paid for, everything will be free. This will make you money, guys, if you follow it, believe me. Okay, thank you, guys. See you on the next video. Ciao.